Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The sinking Australian dollar refreshes its 2-year or around 2.5 as policymakers in the US continue to sing out more hawkish messages. Therefore, it elevated the US dollar overnight and now trades above 113. Charles Evans, the president of the Federal Reserve Bank of Chicago, said earlier that he expects interest rates to rise around 4.5% in early 2023. That is to an attempt to tame record inflation. While the federal fund rates is around 3 to 3.25, the Fed is expected to make at least 100 to 125 basis point rate increases by the end of this year. That was according to Fed Evans. With little economic data for the Australian dollar this week, all eyes will be focused on the US inflationary data, which may shed some light on the effectiveness of the Fed's tightening efforts after the central bank raised interest rates by a jumbo size 0.75 percentage points. That is over 3 consecutive meetings. As we've sinking lower, the market is now looking at this level of 62.4560. A key point, as a break beneath there would give further scope to the downside and bring in the target somewhere around 59 cents. But I don't really want to come out of that call as of yet due to the fact that we are oversold, and therefore I do anticipate that the bulls may actually come back to defend this region. It's a little bit of a tough call considering that the dollar index has rebounded and while maintaining above 113 could go to 115. That would be enough push through this level to see the market sink lower. The euro remains somewhat soft over the last 4.5 days, and also adding to the string of hawkish comments by policymakers overnight, besides Charles Evans, we also got Lael Brainard, the Fed Vice Chair, also said earlier that the effect of the interest rate hikes on high inflation might take longer than anticipated. She went on to say, we are starting to see the effects in some areas, but it will take some time for the cumulative tightening to transmit throughout the economy and to bring inflation down. But let's see what the US Consumer Price Index this Thursday can give us, and let's see if it does give a bit of a snapshot of where US inflation does stand. Looking at the price action though for the euro, we're heading lower towards 96.75 as the initial target, which is nearly upon us now, and may see a slip towards 96.2025. As I mentioned earlier, the dollar index is still a little bit on the rocky side due to the fact is that now it's above 113. We could see a rise up to 114 to 115. That would send the euro all the way down to at least 96.20 and reassess. The dollar yen still teasing that top side and no Bank of Japan intervention at the moment. After around these levels, we did witness that from that candle, which is like a spinning top. However, I'm not a bull at these levels. I still feel the fact is that after the last few candles that we can see from this top side challenge, they can be quite devastating to the position if you are currently holding long, and that is could wipe out the market back towards 142.60-70 if the Bank of Japan doesn't intervene like previously witnessed, or even lower. It went down to around 140, so from 145. So 5 big figures. So you can see it's very risk-taken levels around here that I probably wouldn't entertain. So from a trading point, I would still be very much on my guard in case we see the BOJ or the Bank of Japan intervene. Wrapping up with the last few markets here, which is sterling. You can see the markets hit the brakes as we get closer towards the region that is of 109.75 or even lower around that 15.30 area. I feel the market could actually take a rebound due to the fact is that we do have the UK employment data out later, and also the Bank of England Governor Andrew Bailey, whose speech will be eyed or very much monitored, and see if the market does find a bit of support here. Gold is still weighing to the downside, so after taking 1,682 out, has exposed the region of 1,655 to 58. A break there would give further scope to the downside and bring in a target of 1,642 with a base now seen at 1,612 to 18. Any upside attempts, well, the market can even climb to 72 to 76, but I feel we'll struggle around 1,686 to 88. And oil, well, the market's also hit the brakes after the rally. Has found short-term resistance close to 93. As the pullback is being witnessed, as long as we maintain above 88.65.75, then a rebound is anticipated back towards 92.60.80, and then above there, 96.50 to $97 a barrel. With that being said, a break of 88.65.75 would expose the downside and reopen the case to 84 to maybe even $81 a barrel. With the market still in fears of slowing demand, we could see a little bit of profit taking come through from a break of 88.65 or stop losses. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.